Hi, today is Sunday, September 4th, 2022. Jason Shapiro from crowdedmarketreport.com. So today I thought I would do a little follow-up to what I did on the last video where I talked about an edge in trading and how important it is to have an edge and recognizing your edge and then being disciplined to use that edge to earn returns over time. And I think that's the most important thing to think about is over time. Any one trade can work at any time for any reason, but if you plan to make money over time, you need to have an edge and exploit that edge. So what I thought I'd talk about here was how to exploit that edge once you have it. And again, I talked a little bit about edge and what I thought could be edge and what I thought maybe is not edge, but I could be obviously right or wrong about any of that. I'm a big believer that anything, well, I think that not everything is an edge. The truth is, with proper risk management, you can make almost anything work, right? Because the risk management side of it is much more important. And so, what do we mean by risk management? And what do we mean by exploiting your edge most efficiently over time? So, to me, there's four things you have to decide, right? Your entry, right? Your stop, your exit, and your sizing. So how do we decide these things? These are all sort of difficult things to decide, but what it comes down to is you have to match those things with what your edge is, right? So if your edge is telling you, or your idea is telling you, okay, I have to buy something here. Okay, so you're buying, let's say, S&Ps. Well, you know you have to put in a stop, great, but I'm going to put in a stop of 5 S&P points. Well, is that relevant? If you're trading on a very short-term basis, maybe that is, but the real question is, where am I wrong about being long S&P? And therefore, that's where my stop should be. Where am I proven wrong? Just some random amount of risk, 5 points, whatever, really doesn't do the trick, and it's probably just going to get you whipped around. So while I can't speak to how everybody's edge should handle this, because I don't know everybody's edge, I can speak to what I do, and therefore you can take those ideas and apply them to what you're doing. So, my trading process is essentially picking market turns, usually medium term to, a month or two to longer term market turns. So let's say I'm looking to buy S&P. So why am I looking to buy S&P? Well, for me, as I've talked about many times, it will look like this. Data is showing that people are mega short S&Ps. They're going down, they're going down, they're going down. And I wait for a day where the market has a turning point. And a turning point for me is like a news rejection thing. So the market's going down, you get some bad news come out, the market rejects it and goes up. That to me is what a market turn looks like. So I'm going to buy. That's my entry, right? I'll buy that day. And then from there, it becomes pretty simple as to where my stop should be, because if I'm picking a turn and the market hits a new low, well, then by definition, I didn't get the turn. So my theory has been disproved, so I get stopped. So I have a very definitive stop point that is where my theory is proved wrong. And then from there, I know how to size it, right? Because I know my entry, I know my stop, and I know how much I want to risk per trade, and that's up to everybody how much they want to risk per trade. I target my portfolio volatility to be around 8%, so I happen to know that to get an 8% volatility, given my trading history and everything, that I need to risk about 70 basis points of my portfolio a trade. So again, I have my entry, I have my stop, and I size it so that should I get hit at that stop, it's a 70 basis point loss to my portfolio. So I know exactly how to size it. So I have my entry that is based on my edge as I see it. I have my stop, which also is based on my edge being proved wrong. And I have my sizing, which is, again, based on those two things. And then I have to figure out my exit. So the way I do it, again, my theory is the market's too crowded short, so I'm getting long. So when the market is no longer too crowded short, I take my profit. So when the data shows that what was a massive amount of shorts is now no longer a massive amount of shorts, which to me, I have an oscillator that measures that, and when it gets back to neutral, I take my profit. So that's how it's done. Given my edge, how do I enter? How do I stop? How do I size? How do I exit? And I would advise figuring that out for your edge, you know. And again, the most important thing is, where is it right? Where is it wrong? Therefore, that's where I'm stopping. How do I size it? Well, I'm sizing to the stop, so that when I'm wrong, I lose what I expect to lose. And how do I exit? Well, the exit becomes when your theory or your edge is over. Whatever that edge is, whatever that theory is, there has to be an end to that. So that's when I get out, because the edge is no longer there. So why be in there? So that's really it. Again, it's just a question of matching your edge to this risk management stuff. And this is how you're going to most efficiently optimize the returns over time that you can get from trading your process or your edge. It's all about process, right? It's all about mechanical. Be a machine, right? Don't say, oh, well, the stop is blah, blah, and don't do it. You know, you have to be a machine. You have to be disciplined in all of these processes if you plan to make money over time. And look, you're going to be mad a lot of times when your stop gets hit, and that's the bottom, and then it turns and goes the other way. It happens, but 80% of the time, I would figure. But the times that you do get stopped, those other 20% of the times are going to save you from blowing out. So, and that's what you need to do. You need to be around long enough. If you blow out, it doesn't matter what your edge is, you're not going to be able to take care of it. So that would be what I wanted to talk about today. And good luck thinking about that. Good luck implementing that. And obviously, as always, any questions or comments, let me know, and we'll talk again next week. Thanks.